baby, the market's coming back with an utter vengeance. Don't chase those gains, but I want to talk about the news pushing my favorite stocks, whether it's BABA, Tesla. I want to talk about the earnings cycle that may come up to put some pressure on this rally and stocks that I will consider buying if they dip from here. And if that is a conversation you can appreciate, hit that like button, because not all of us can be doing so well. And my heart goes out to the Russian people that don't believe in what Putin is doing, because I have been following the Moscow exchange, and recently I have been able to get data updates on the watch list. I'm like, what the heck is going on here? I can only get data going into the beginning of March, and that is because it's been quietly talked about, but unlike China that is actually working to fix their stock market, basically the Russian Moscow exchange has been completely delisted at a value of 0 as of March 7th. So, that's pretty brutal. But taking a look at the S&P 500, guys, it's now only down 6% for the year to date. The NASDAQ down only 11%. And the TSX, my Canadian brethren out there, we have been crushing it with our RioCans, our banks, our telecoms, our energy. Damn, we are up 4%, just crushing the U.S. markets this year. And let's hope that trucks forward. Now, the Shanghai index has been kind of flat after the big rally that it had, but if you're buying them BABAs, the JDs, the Tencents of the world, oh baby, we be crushing, and that's what I want to talk about. But first and foremost here, guys, just take a look at all this green today. I mean, we got Bitcoin, we got the S&P up 1%. I mean, Tesla's flying up. It was up much higher than this. It almost crossed $1,000. BABA's up 10.73%. Shopify's up 6%. Other than outside of a few dividend stocks, my accounts are doing just wonderful here, folks. So print them tendies. So let's talk about Alibaba first and foremost, because this has become a new favorite of mine. Outside of what I bought that I disclosed going into the end of last week, I did purchase some more BABA actually yesterday. I kind of re-upped my share count a little bit more, and my average buy is now around $94 a share. I have a lot of hope for this company, as so does the individual company itself, because they just kind of re-upped their share buybacks. I think going from last year, they went from 10 billion, they raised it to 15 billion, and then recently they're like, hey guys, there's no better place to invest our capital than in our own company, because arguably it is the best growth stock out there. It's one of the largest companies in China that you could pretty much buy at a valuation metric that actually makes sense, right? So outside of Facebook, BABA, these are my two highest conviction stocks I would be buying if I didn't own Facebook already. So this is great news, because any shares I'm buying of BABA now exponentially over this year are just becoming more and more valued as they take shares off the table, right? Let's talk about Tesla, another favorite of mine that has just been utterly rebounding here. We mentioned, folks. Now, Tesla is doing a lot. Like, their ambitious goals, you know, Elon is expecting well above 50% revenue growth this year, which is phenomenal. I mean, they just came out with the recent announcement that they're going to open the Berlin Gigafactory ahead of schedule. So that's pretty well. Is it ahead of schedule? I don't really know. But either way, the Berlin factory is going to be opening up. This company is looking at scaling by 2030 to delivering 20 million cars. That is a real mission, because that's more than like the 4 top car companies combined. Whether they get there will be debatable. But if you are buying this company, or you were buying the dips, as I always iterated, this thing is still insanely overvalued. So make sure you're buying it for 3, 5, 10 years from now, because I figured a 50% growth rate, 3 to 4 years, the PE ratio at your buy price will make a lot more sense. And then we just need self-driving robotics, or basically the energy storage to really kick off. And then we're back to the moon, baby. So I still love my Tesla stock. Still love what Elon's doing. Very interesting guy that wants to fight Putin. I mean, does it get more entertaining than that? Now let's talk about everything money real briefly, because this dude likes just crapping on people that buy overvalued stocks, whether it's me, Kevin. Today, it's got Cathie Wood, and he just kind of this guy is shorting the QQQ ETF, by the way, even from where it is now. He thinks it's got a long ways to go down, and I don't think he's necessarily wrong, but when it comes to the ARK ETF, he says, oh, she doesn't know how to invest. She's not a value investor. Like, not everybody needs to be a value investor to do well in this market. Cathie makes highly speculative bets. I feel like she's more of a speculative investor based off a business model of where she sees it going in the future, and that is a specific part of the market that can offer the most absurd returns, but it comes with the most amount of risk. High risk, more volatility, the higher amount of return. Not something for everything money. I'm still a fan of Cathie Wood, even though, you know, a lot of people are crapping on her, but I think if the markets do rebound, some of her stocks have real potential to go higher here, right? So let's talk about, you know, the shorting the QQQ ETF here, guys, because a lot of people have been buying up this dip, but some of my biggest fears around QQQ and the S&P 500 is they largely hold the same top 10 companies. The QQQ is weighted by like 50% of the top 10. I think the S&P is like 25% or around there, something like that. And those stocks are primarily made up of Apple, Microsoft, Nvidia, Amazon. Now, these companies specifically, in my eyes, I have a hard time trying to figure out where the best entry points are, and a lot of people would just cost average into them. But because I already own Apple and Microsoft, and I look at these companies and I just have a hard time making sense of the value. And that's where I kind of understand why Everything Money runs their value. And they're like, we should be shorting this thing, right? Because until we can get through Q1 earnings, I have no idea what the market is going to do here. A lot of people are getting really hopeful by this interim rally, but I'm a little skeptical still with all this stuff. Like I said, I feel like we're in the eye of the storm, and this could just be a midterm blimp before earnings hit. And then we see the impacts of inflation and the lack of spending in the markets, and whether we truly head into a recession or whatever happens, because the Fed doesn't know what's really going on here and nobody really does. So I would just take all of this with caution, make sure your risk is well mitigated, and just do not chase the rallies here, because there's still potential for opportunities down the road, because these things, again, are by no means cheap, right? So what would I want to buy here, guys? If those earnings come up, we see a bit of a decline in the market. Well, Shopify, guys, this one, oh man, this one has been, I have a hard time wrapping my head around why I'm not owning this at this very moment. But other than not wanting to go bankrupt from the cash that I have currently in the bank, because I don't have a lot, I really invested a lot of it over the last couple of weeks into BABA and things like that. Shopify, guys, partnered with TikTok. They're the second largest e-commerce player next to Amazon. They're building out warehousing to do 2-day deliveries, which they'll easily be able to take advantage of with their partners. And they have partnered with basically every major industry that I know of in Canada. Saputo was a recent one. I used to actually own Saputo. It was a Canadian cheese company. They're partnered with the Ontario MJ stores, like the largest online MJ retailer. Like this company, guys, it just, you know, we're talking about subscription as a service business model. Unlike Facebook, people are going to rely on them like I do. I run a Shopify store called thechartmaster.com, where I kind of show you guys those spreadsheets. And that thing I pay a subscription for every single month. Like it's such an easy revenue model with such insanely high margins. I just can easily see this company over the next 5 to 10 years doubling, tripling this business just by getting into the warehousing and doing basically what Amazon's doing, let alone the continued scale, like being able to get in with TikTok and basically allowing them to adopt the stores directly into it so people can just click it and buy the products. Brilliant stuff. They continue to innovate. They continue to grow. The only exposure I have is through RioCan, because their headquarters is through a RioCan real estate investment trust, right? Like they own the mall or the building, the offices that Shopify is using in Toronto for their headquarters. So I feel like I could own this company through a lot of different facets, but like this one, every time I come back around to it, I just noticed Jeremy from Financial Education talking about it today.
The two most important companies in the world. One, Amazon. All right, and that might be one of these 21 stocks as well. Number two, Shopify. But the difference between Amazon and Shopify is, Shopify has come out of nowhere. This was a $6 billion market cap, if we go back 5 years ago. Shopify came out of nowhere, and they went in a matter of a 5-year span from just being some little company that's like, oh, they're kind of on the come up, to, wow, this is like a giant corporation that's going to become much, much bigger in the future.
I don't know where I'm going to start a position in this one, but it's definitely probably my next growth stock. The dividend stock, I'm going to make a whole video about my list of dividend stocks I want to buy, because we got some juicy dividends coming in and I'm looking for places to park those as well. But that's where we're at today, folks. Just wanted to have a fun broad view conversation. How do you feel about this rally? Do you think it's going to be short-lived? Do you think we oversold the bottoms and now we are heading back up, or are we in a flat line, a kangaroo market? I don't know, but I'd love to know what you think. So stay cool, stay awesome, and as always, I look forward to catching you in the next one.